The United States performed a rate check on Japan and the yen, and they might intervene. What do these words mean, and what is a rate check? What is an intervention? Let's find out. Hello and welcome to another KuLAB. My name is Ku. This is our laboratory for learning. Thank you for joining us for another business news breakdown. Today we're going to take a look at an article about the idea of rate checks or interventions. Governments applying some pressure on other governments in regards to currency. This particular case is the United States and Japan in regards to the yen. Let's dive in, take a look at some of these business concepts, some of the vocabulary associated with this idea, and see if we can't understand what it means to have a rate check or an intervention in monetary policy. So let's go ahead and get started with our next KuLAB. As always in my videos, I like to give credit to our authors. So today we're taking a look at an article from Kate Duguid in New York, Claire Jones in Washington, and Peter Wells in Sydney. Okay, let's take a look at this headline. Yen rallies as rate check sparks intervention speculation. Japanese currency rises most since August after New York Fed queries market participants on price levels. Okay, so two of our big vocabulary words are in this title. So let's take a look at some of the other words first and then really dive into those major vocabulary words. The yen here is the name of the Japanese currency, similar to a dollar or a ruble or the yuan. This is Japan's currency. So the word rallies here means to gain momentum. It means to go up in a way. When you rally, you come back from some sort of defeat or come back from being down. So in this case, the Japanese yen was very low and it started picking up. It started being worth more against the US dollar in the past weeks. Okay, our word here, speculation, means people are guessing. They think this is something that might happen. Speculation usually means to do something without any evidence, to guess. You might hear it in legal terms or on a law show that you watch. Objection, Your Honor, speculation. It means they don't know for sure. They don't have any evidence. They're just guessing. So in this case, they were guessing about something called an intervention. To talk about our major business concepts, let's go ahead and look at our first couple of paragraphs here. Japan's currency rallied on Friday by the most in almost 6 months as speculation swirled that authorities could be planning an intervention. The yen jumped 1.7% against the US dollar to 155.7 yen on Friday, a big rise for a major developed market currency. The gains came after the New York Federal Reserve performed a rate check on Friday, asking market participants for yen pricing in a move that is frequently seen as a precursor to a market intervention, traders said. Okay, so let's break all of that down. The first thing we need to understand is this idea of a rate check. So what exactly is a rate check? So the word rate here basically means price. So this is a price check from a major institution. Now in this case, it's coming from federal governments. The United States government asked major banks, major currency traders, major market participants, what is the current price of yen right now? Now you might think that's pretty straightforward. They're just asking for a price. But when a federal government does this, it becomes a really big deal. It usually means they are going to do something significant, probably make a big purchase of whatever currency they're checking the price on. So if they're just checking the price, why are major business publications writing about rate check? Why is it such a big deal? Well, for that answer, there's a couple of reasons. Number one is the fact that when a major player like a government, especially the size of the United States government, checks the price, it sometimes means they're going to make a really, really big investment. So the market needs to adjust almost immediately. So a lot of news starts happening, a lot of speculation about what might happen. The news that, a government, in this case the United States government, performed a rate check, kind of sends a message to the market that something big is going to happen, something big might happen. Now, a rate check itself is also a signal. The information becomes public. And so the market starts to correct itself a little bit. Some of these corporations or some of these big businesses or currency traders who had a lot of currency in yen might decide to sell right away because the yen's price is going to go up if the United States buys a lot of it. So the market starts to correct itself a little bit just on the information that a rate check was performed. So this is kind of how governments manipulate or massage the market without actually doing anything. If you find out that a government made a rate check, then the market sometimes will balance itself, will sometimes fix itself. Maybe the price of yen will go up against the dollar and it won't be so weak. If for some reason that doesn't work or the government has to step in, they have what's called a market intervention. So a market intervention is when the government does something. In this case, they would sell United States dollars and buy a whole bunch of yen. The scale at which they would buy the yen would force the yen's price to go up. The yen would be in demand all of a sudden. And so the price would go up, and people who had been buying yen, hoping for the yen to get weaker and weaker and weaker, they need to sell their yen very quickly. The yen's price goes up a little bit, and so it sort of balances itself against the US dollar. Now, to be clear, market interventions often come from the own country's government. So Japan might do a rate check and a market intervention on the Japanese yen, and they've done it in the past. The United States might do a rate check and market intervention on the US dollar. That's happened before. It's a little more rare when another government does a rate check on another country's currency. That's what makes this situation very newsworthy. That's why places like the Financial Times or Barron's or these types of organizations will have a business headline about rate check. So that's what you're seeing. You're seeing that the United States government checked the price in case they needed to make a really, really big purchase. And that purchase, that movement, that action would be a market intervention. It's 2 steps. Rate check, check the price. Intervene or have an intervention. Intervene being the verb, intervention being a noun. And that is an action, doing something, in this case, buying and selling of that currency. Now, a few other vocabulary words in this paragraph that are very interesting. Talked about speculation. We have the word precursor. So precursor means something that happens before something else. So pre means before, and cursor is a movement, right? So in this case, a rate check is a precursor to an intervention. It happens before another action. When you have the rate check, people start acting, markets start moving. Again, when a government makes a huge purchase, there is a significant action. The market reacts in sometimes very predictable ways. The sharpness of the move, which came after the yen earlier threatened to break the 160 yen red line, is of the kind that is often associated with FX intervention, though it could simply be a sharp technical unwind, said analyst at US Bank Evercore in a note to clients. So let's break this down. That 160, the word red line, when you see it in business, red line usually means a line that you shouldn't cross. often referred to as the English idiom, a line in the sand. So it's sort of a line that if you cross it, bad things can happen. So for the yen, 160 yen to $1 is the maximum they like. That's a red line. If it goes above that, then there's some serious issues. FX intervention. FX here stands for Forex. That's just where you buy and trade currency or money. FX traders, their job is to, again, buy and sell currency. And so there's a whole industry that just buys and sells currency. Our other phrase here, sharp technical unwind. A sharp technical unwind means the market was moving without the intervention. All of the things that the market can do. Unwind usually means to get out of market positions. So people were selling things. In this case, technical means that the trades were made not because of an intervention, but because of other technical data they received, whether that's the price moving, the price going up rather quickly. So they wanted to take that information and unwind their position. And of course, sharp here, sharp means something that suddenly happens very quickly. So a sharp technical unwind would be a very quick unwind of your positions because of some technical data that you received, not necessarily because of the intervention. Okay, thank you for joining us for that interesting business article. A couple of key economic concepts here, the idea of a government rate check and a government intervention. Really interesting look on how that works. I hope you enjoyed it. If you did, please hit that like and subscribe button. It really helps us out. I really appreciate it. Go ahead and write down in the comments, what do you think will happen? Should the United States intervene in Japan's currency and prop up the yen? What do you think will happen in Japan? Did you take a trip to Japan? Many people did, because the yen is so weak and a lot of things are very cheap. And so the dollar or the euro goes a lot further in Japan this year. So tell me what you think, how you feel, and I'll see you again in our next KuLAB.